One of the biggest stories in the business world over the past decade has been the rise of electric vehicles. In 2011, 39,000 fully electric passenger vehicles were sold globally. In 2023, 9.5 million fully electric vehicles were sold, along with 4.1 million plug-in hybrids. One of the biggest challenges of widespread EV adoption is a large amount of metals, such as nickel, copper, cobalt, and lithium required in their batteries. Starting around 2021, many analysts started to fear that there isn't enough lithium production globally to support a complete shift to electric vehicles. For example, the World Economic Forum questioned whether or not there is enough lithium to achieve net zero emissions. Time magazine said lithium was in short supply. Reuters said the world faces a lithium shortage. S&P Global said insufficient lithium supply could decelerate the energy transition. At the time, this indeed appeared to be the case. At the peak in 2022, the price of lithium surged to 560,000 RMB per ton. This is equivalent to about $78,000. As of February of 2024, the price has declined by 85% to $12,000. The lithium mining stocks have been similarly volatile. At its peak in November of 2021, the Global X Lithium and Battery Tech ETF surged to a peak of $95. Since then, it has lost about 55% of its value. This is despite the fact that electric vehicle demand around the world is still growing rapidly. Global EV deliveries surged 33% in 2023 and are expected to continue increasing going forward. So why did the price of lithium plummet 85% from its highs? Join us as we take a deep dive into the lithium mining industry and look at what the recent price action means for the global transition to electric vehicles. This video topic was recommended by a premium subscriber to differentiatedanalytics.com. Differentiated Analytics is a website that we created, full of useful tools for individual investors. For example, our short-selling intelligence product includes original research, and our short report aggregator provides summaries and links to recent activist short-selling reports. You can make a free account to access some of the website's features. A premium account gives you access to all the features, plus access to our private Discord server where we talk about stocks, and you can recommend video topics for both Wall Street Millennial and our second channel, Broken Business Models. A premium subscription costs $20 per month, but for a limited time, you can use the coupon code WSM50 at checkout to lock in a 50% discount. That gives you access to all the premium features, plus the Discord server. So make sure to check it out with the link in the description below. And now back to the video. Lithium is a soft metal with high electrochemical potential, low atomic weight, and low self-discharge rate. That makes it particularly desirable for use in batteries. Most lithium is extracted from brine pools. Brine deposits with significant lithium concentrations are pumped into evaporation pools, where they evaporate over a period of 8 months to 3 years. The brine becomes turquoise, green, and yellow at different stages of the evaporation process, creating a distinctive, almost magical appearance. Once the water evaporates, a chemical process is used to separate out the lithium. The lithium then has to be purified and refined before it can be used to make batteries. Lithium can also be mined from hard rock. This is more expensive than the brine extraction method, although it can often be much faster. Lithium production is highly concentrated in a handful of countries. According to the US Geological Survey, Australia alone accounts for 45% of global lithium extraction. Chile accounts for 23%, China 17%, Argentina 5%, and every other country is less than 5%. There is currently only one lithium mine operating in the US, which is responsible for about 2% of global extraction. In terms of processing, more than 60% of raw lithium is processed in China. China is also the world's largest battery producer. Due to China's essential role in the global battery supply chain, the most active lithium trading markets are in China. As a result, lithium prices are often denominated in the Chinese currency RMB. Lithium itself is a very abundant resource, but the mines need to be very large to achieve economies of scale, and due to their large consumption of water, the permitting process can be lengthy. Lithium has long been used to make batteries in consumer electronics, as well as a few industrial uses, but it wasn't until the rise of electric vehicles that demand began to surge. The battery in a fully electric car requires about 12 kilograms of lithium. The battery in a plug-in hybrid requires about 5 kilograms. If we look at global lithium production, we can see that it really started increasing around 2017. Between 2017 and 2019, lithium production more than doubled, from less than 40,000 tons to over 80,000 tons. Supply growth took a short pause during the pandemic, but started surging again in 2021. In 2023, lithium production reached 180,000, which is more than 4 times its 2017 level. As an aside, these numbers come from the US Geological Survey, which calculates production based on pure lithium produced. Some other sources use lithium carbonate equivalent tons, which is a slightly different unit of measurement. For simplicity, we'll use tons of pure lithium for the rest of this video. This increase can be almost entirely attributed to electric vehicles. In 2011, 39,000 electric vehicles were produced. In 2023, 13.6 million were produced, including 9.5 million fully electric vehicles and 4.1 million plug-in hybrids. We can use these numbers to estimate the proportion of lithium demand coming from EVs. While this is a rough estimate, we can see that roughly 75% of lithium demand in 2023 is related to EVs. Lithium prices were pretty stable at around 30,000 RMB per ton in the early 2010s. In 2016, the price surged to around 140,000. This was due mostly to Tesla placing massive battery orders for the Model 3. Supply of lithium is fixed in the short term, as there are long lead times. Remember that it takes 8 months to 3 years for the brine to evaporate. So even if a mine adds capacity immediately, it will likely take more than a year for this to translate into increased production of refined lithium. Because of this, when demand increases, the price of lithium can skyrocket. By 2018, new lithium production finally came online, and prices fell back down to around 40,000 RMB per ton. Over the following years, EV production continued to increase, and by 2021 there was another shortage. The price of lithium skyrocketed to a high of more than 560,000 RMB. This is when we got all the frenzied media articles predicting lithium shortages. In April of 2022, Elon Musk himself said that Tesla may have to start mining its own lithium because the costs have gotten insane. Yet since then, the price of lithium has fallen by 85%. So where did so much new lithium supply come from? Theoretically, there is enough lithium in the world to build billions of electric cars. The problem is the cost of extraction. Lithium extraction requires large amounts of water. It just so happens that most lithium deposits are located in deserts, where water is already scarce. For example, there is only one lithium mine in the US operating today. It's located in Nevada and requires an estimated 4 billion gallons of water per year to generate about 5,000 metric tons of lithium. This has depleted much of the groundwater, which was already scarce to begin with. Plans to build additional lithium mines in Nevada have become the targets of protests and lengthy legal disputes around water rights and other environmental concerns. Substantially all the growth in lithium production over the past 6 years has come from 3 countries: Australia, Chile, and China. The reason Australia saw such a large increase is due to its geology, which favors the hard rock method of mining. Hard rock mining is more expensive than brine extraction, but its lead times are much shorter. Production can be ramped up quickly. As prices surged starting in 2021, Australian miners quickly ramped up production. China and Chile both use the brine extraction method, but their more relaxed environmental regulations have allowed them to surge production. Does this mean that there will be no shortage of lithium as the world transitions to EVs? In 2023, approximately 18% of global automobile sales were either battery electric or plug-in hybrid. We are likely still in the early innings of the transition to electric vehicles, as a number of governments around the world have mandated a complete shift to electric vehicles by 2035. Of the top 10 countries by new vehicle sales, 8 of them have announced some sort of EV mandate by 2035. In China, the government requires that by 2035, at least 50% of new car sales must be either fully electric or plug-in hybrid. The remainder have to be hybrids. Regular hybrids don't require significant amounts of lithium, so they're not really relevant for our calculations. The US does not have any mandate on a nationwide level, but both California and recently New York have mandated that 100% of new car sales must be electric by 2035. Between now and then, a few more states will probably follow suit. It's not unreasonable to assume that we could see 50% EV penetration for the US as a whole by 2035. Japan has mandated that by 2035, 100% of new car sales must be new energy vehicles. Conventional hybrids are classified as new energy vehicles, so it's difficult to predict what proportion of car sales will be EVs. Let's assume 30%. The UK, EU, and Canada have also mandated 100% EV sales by 2035. This includes plug-in hybrids, but not conventional hybrids. There are some smaller countries with similar EV mandates, but if we included all of them, this list would become too unwieldy. Let's assume that by 2035, EV penetration will reach 20% in the rest of the world. While this is a bit of a wild guess, it shouldn't make too much difference, as the rest of the world category represents less than 1/3 of global automobile demand. Based on all of these assumptions, there will be demand for 40 million electric vehicles by 2035, representing a little less than half of the total automobile sales. In most jurisdictions, plug-in hybrids will still be allowed. In 2023, 70% of EVs were fully electric, with 30% being plug-in hybrids. A fully electric car requires 12 kilograms of lithium, while a plug-in hybrid requires 5 kilograms. Based on these numbers, we get EV-related lithium demand of 400,000 metric tons in 2035. If we assume the 50,000 tons of non-EV related lithium demand remains constant, total lithium demand will be 450,000 tons. To achieve this, global lithium production will need to increase by 22,500 tons per year, every year between now and 2035. For context, between 2017 and 2023, lithium production increased by 24,000 tons per year on average. So if production continues increasing at the same rate, the world will have more than enough lithium to achieve 50% EV penetration by 2035. In fact, we may be overestimating lithium demand. Currently, the biggest barrier to EV adoption is high cost. If automakers are to meet the government mandates, they will likely focus on cheap EVs. For example, the BYD Seagull starts at the equivalent of $10,000. These cheap EVs have smaller batteries that require less lithium. Over the past 6 years, EV penetration has increased from 0.5% of new car sales to 18%. Moving from 18% to 50% over the next 11 years shouldn't be impossible. It's important to remember that there is more than enough lithium in the world. The US Geological Survey estimates there are 28 million tons of known lithium reserves in the world today. That number will increase as new deposits are discovered. But just today's known reserves would be enough to create roughly 2.3 billion fully electric vehicles. Even if 100% of new car sales transition to EVs tomorrow, currently known lithium deposits would last 27 years. With that being said, there is still the possibility of supply-demand mismatches going forward, which could cause prices to spike temporarily, just like what happened in 2016 and 2021. But as soon as this happens, lithium producers will ramp up production, and within 2 to 3 years, prices will fall back down to normal levels. There are a myriad of challenges related to the green energy transition, but at least in the medium term, access to lithium probably won't be one of them. Alright guys, that wraps it up for this video. What do you think about lithium? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.